So where is Tesla's stock going from here? We'll go over what has happened in the past couple of days, what happened today, and what's going to be happening for markets over the next week or two, and where I think Tesla's stock is going. So do me a quick favor and hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section, and what is your expectation for Tesla. I want to start with something that is obvious to a lot of people, but as markets sit at new all-time highs, you're above most banks and major institutions year-end price targets, okay? So the S&P is over $5,300 today. So Bank of America's target's $5,400. That's a little bit of upside from here. All of these other price targets are lower. Besides BMO's, theirs is 5,600, so that's a little bit higher as well. And then you do have Associate Generale at 5,500, UBS at 5,400, and Wells Fargo at 5,535. So about 80% of your banks and institutions have, well, I should say it like this. The S&P has already eclipsed, to the upside, about 80% of major banks and firms' year-end price targets. So what comes next for broader markets? One of two things. I think it's pretty safe to say big tech is fully valued plus some. There's not a lot of room for a Microsoft to run here, for a Google, for an Amazon to run here. Nvidia, and just pick the stock. Meta, just pick it, okay? There's not a lot of room for those stocks to run here. So if we do get further upside, guess what sector it's most likely going to be in? Small caps and interest rate sensitive stocks. If indeed the economy does avoid a recession, inflation does start to trend lower and moderate, that means we're going to be looking at the first cut coming here in the not so distant future. Goldman Sachs believes that first cut is coming July 31st, whereas Morgan Stanley and other major banks are expecting September. It's really going to depend on what happens over the next 3 months of data, whether or not we actually get a cut in July, or if that turns into September. There's a lot of people that have pointed out it's pretty political to cut rates right before an election in September. So maybe the Fed does opt to cut rates in July. Now, remember, these big tech stocks, your big companies out there on the markets, they do not benefit from the Fed actually reducing rates. They're actually hurt by the Fed reducing rates because most of these companies, well, all of your big tech companies that have a lot of cash in the bank, they're actually making more money. They're doing better as rates are higher. No wonder why they've outperformed other stocks. So the Fed actually lowering rates is likely a negative headwind for big tech, right? Magnificent Seven, if you will, and likely a big positive for interest rate sensitive and small cap stocks. I want to caution you though, because the first cut from the Fed during a cutting cycle tends to lead to about a 23% down move in stocks. If a recession is the reason why the Fed is cutting rates, like if the economy weakens quickly, then it's usually a 30+% pullback from the peak upon the first Fed rate cut. So historically, the first cut from the Fed is not great. But if the first Fed from the cut comes not because the economy is weakening, but because inflation is falling and the economy is holding up and doing okay, then that is good news, or at least it should be good news for stocks. You don't see that all too often. So it's obvious. One of two things happens here. Either the economy continues to do okay, not red hot, but okay. That does help put downside pressure on inflation. Inflation falls, the Fed starts to cut rates, and there's no utter collapse of stocks. There's no big crash from here. Business as usual, basically, is what I'm saying. The Fed can start to cut rates in July. Interest rate sensitive stocks will start to outperform here in the not so distant future. That would mean a Tesla, that would mean a SoFi, that would mean a PayPal, a Square, a Fubo. All of these stocks that have been underwater for years, that have declined year after year after year for most of those 3 years now in a row, they should start to see a lot more capital getting allocated to them. You also have $6 trillion of cash on the sidelines that, as the Fed starts to cut rates, will do one of two things also. It will either leave those, markets, right, and head into capital markets and get redeployed into interest rate sensitive stocks, some of the stocks that I just mentioned and many others, or they're going to start locking in those long-term yields by buying treasury bonds. And that will also help to create downside pressure on the 10-year treasury. And that's also bullish for stocks. 10-year treasury in recent days has already started to fall from a high of about 4.7%, 4.7%, down to where you are now at 4.37%. And we don't have Q1 data for money market funds yet, but last we knew it was at about $6.4 trillion. So if even a fraction of that comes back into our markets, think about it like this. It would be massive. Small cap stocks, the Russell 2000, the entire market cap of that is about $2 trillion. This is 3 Russell 2000s in money market funds. If you just get $500 billion coming out of this, let alone a trillion or $2 or $3 trillion, well, that would have huge implications for stocks. So that's the good scenario. Economy stays okay, inflation falls, the Fed can start to cut rates. It's an election year. There's going to be volatility, but in the end, after an election, November, December, tend to be very strong. It could turn out to be a very good year, but I don't think there's much upside left for the S&P, the NASDAQ, or big tech. I think if there is a place you want to be positioned, it is in your small cap interest rate sensitive names. The second potential outcome here that could materialize over the next coming months is a deeper consumer slowdown. Now, we had Walmart earnings today. Walmart said the consumer's stretched, but they're still spending. That's great. Not quite a huge warning. You are seeing Walmart US same-store sales that are declining from 8.3% in Q4 of 2022 down to where you are now, Q1 of 2024. Their fiscal year is 2025 right now, but it's for this quarter, was 3.8%. So you have really started to see quite a slowdown quarter after quarter after quarter, and Walmart's e-commerce business is picking up some of the slack from the same store sales comparisons. Now, Walmart says wallets are stretched, and I didn't think about this in this kind of light before Walmart's earnings, but it makes sense today. Walmart's like the last place that should see weakness, okay? Because where else do you go for cheaper prices? There's nowhere, okay? Price match guarantee, all of that. There's nowhere you can go for cheaper prices than Walmart. So if Walmart is seeing broad-based pressures from the consumer, then the economy is in a much worse position than anyone would like to acknowledge, okay? That's like an 08 scenario over again. Now, Walmart said that the month of April, which is the start of Q2, right? January, February, March are the quarters we just got reported on. Walmart said the start of Q2 was actually pretty slow. It kind of reflected your overall retail sales data that came in 0% for the month of April. They say the start of May has been normal again. So we'll see what happens there. I think Q2 could be an interesting one, as now we are starting to get data showing the consumer is slowing down. And based on what I see out there in the real world, people are definitely slowing down. And what I hear from you guys and others, and myself included, people are slowing down. You also have McDonald's and Starbucks, more discretionary places starting to report a slowdown. And in theory, if the economy was weakening and people were slowing down their purchasing, I would expect Starbucks and McDonald's would get hit first, or maybe not first per se, but would get hit before a Walmart. So I still think the economy is weakening, but I think it's going to take more time than a lot of people think. Now, some people think there's no weakening at all, and I think that's where some people might be a little bit disappointed. Now, coming tomorrow, you really don't have much of anything. You do have CB leading index month over month and Fed Waller this week at about 10 o'clock in the morning, but that is pretty much it. Next week, you have some Fed speakers. Bunch of Fed speakers actually. Monday, Tuesday, speech from Fed Jerome Powell over this weekend should also acknowledge that. You have the FOMC minutes next Wednesday, initial jobless claims next Thursday, inflation rate out of Japan could be important, maybe not, and then durable goods orders on Friday. You're expecting a big slowdown there as well, but not too many hard, big catalysts. Now, durable goods orders is obviously important, something I will pay attention to. In fact, the expectations for next Friday's durable goods orders number is a month over month of 0.3%. Last month, the month over month was 2.6%. So that would be quite a slowdown, and I think this is another gauge of, consumer spending activity. Next week, you will also have NVIDIA earnings, which I think the markets probably have a good understanding of how that's going to be. It's going to be good, not excellent, not crazy, spectacular, huge guidance raise like we've seen in the past. I think that's a pretty safe assumption. I think all of that's probably already baked into the markets. Now, coming June 7th, you do have a jobs report, and then coming right before the next Fed meeting, you are going to get more inflation numbers. So it's going to be a couple weeks here until you get jobs data, inflation data, GDP data, anything along those lines. But there is still data coming out next week. It just could be a little slower going for the markets over the next week or two. And I do think this slower going over the next week or two could be a positive for stocks in the time being. And I wouldn't be surprised if Tesla gets back into the 180s, or at least close to about 180s. If just staying in the 170s could make sense. Also, until we get, either good news from Tesla itself or bad news from Tesla itself, or just larger economic data. Next Friday's durable goods orders, that could definitely move stocks as well. But I don't think a bad durable goods order is going to be necessarily a huge positive for Tesla either. I think considering we have all of our major data out the way, we've heard from Jerome Powell, earnings season is basically over with besides NVIDIA. I think markets have some room to kind of melt up here and to just overall go higher. And as capital starts to prepare for those first initial rate cuts, I do think that does create an overall positive momentum for Tesla stock going ahead. Now, keep in mind specifically for Tesla, next week there is a lot of option activity targeting the mid 180s, as we went over in the last video. Some individuals, some institutions are going out and selling puts around the 185 expiration for next week. That's basically saying expect Tesla stock will be above 185 next week by next Friday. Who knows? Maybe, maybe not. But really, long story short, inflation moderated, the Fed's bullish, earnings are okay, the economy's okay. That should be a very good backdrop for Tesla to do well. Then again, markets have now soared to new all-time highs, and maybe there is a little bit of consolidation here over the next couple of days that could lead to some, sideways, if not downward trading action for Tesla. I do feel strongly over the next coming months, Tesla stock will perform very well unless we do go into a recession, or it looks like, with clear definitive data that we are going into a recession. Then you get some downside in stocks, right? Recession's never going to be good, no matter if you're talking about 10 rate cuts. Doesn't matter. Recession's always going to be a negative for stocks, and that's the biggest thing that I am watching for right now. I do think it's a great time to have some cash on the sidelines, but also if you're all in on Tesla as well, I don't blame you. That's probably a pretty good area to be in, considering everything we've talked about here in this video. If there is an area of the markets that should start to do well, it's Tesla. Interest rate sensitive, high quality, profitable, doesn't need to raise capital. I mean, what else do you want? 80% of Tesla's consumer base is getting Teslas with a loan. I mean, of course, demand has been low as rates are this high. As rates start to fall, demand will pick up for Tesla, and boom, that's a pretty good recipe for Tesla stock to do well. You also have what Webull is calling a bull flag here, which could set Tesla stock up for a run into the 200s. If you take a look at this, yeah, I guess this is the flagpole. This is the flag itself, and boom, could lead to some pretty explosive upside based on those technicals. And I will remind you, there's a lot of potential catalysts coming for Tesla as well, like robotaxi in China, or just outright full self-driving entering the Chinese market. That should be happening in the not so distant future. Tesla's already basically gotten approval to launch full self-driving in the country. That news came out, Tesla stock rallied 15%. That it might happen. I think when it actually does happen, yeah, you're gonna see the shorts under a lot of pressure that are short in Tesla. I think there's also a lot of people that want to get reallocated to Tesla as well. So if Tesla does start to go up here without any near-term fear catalyst left out there in the marketplace, you could definitely see Tesla stock start to run quite a bit. I mean, really, what's the short thesis right now for the 107 million shares that are currently sold short? What? The economy's going to enter a recession? Fine. Okay. Then why are you long in other stocks and short in Tesla? That doesn't make a whole lot of sense to me. Are you short in Tesla because Elon is no longer in charge or doing his job? That doesn't make any sense. That's obviously not true. We've figured that out on the last earnings. Some people may have been short in Tesla based on that reason, but at this point, that's no longer a question mark. Are you short in Tesla because you believe demand for EVs is down and is never coming back? Maybe. Some people are. That doesn't make a whole lot of sense because, I mean, you just see Tesla did an 1% interest rate offer for the Model Y for the month of May, and literally search trend activity is exploding for the Model Y, exploding for the Cybertruck. Basically every Tesla model Tesla offers is exploding in Google Trends data. Tesla does not have a Tesla demand problem. They have an interest rate Tesla demand problem. As rates start to fall and it looks like we're going to get rate cuts, yeah, that's a recipe for disaster for the shorts. So my general consensus view is, if there is anywhere you want to be allocated in the markets, it is in a stock like a Tesla that's interest rate sensitive, that's high quality, that's free cash flow positive, investing back into the business. Those are the areas that qualifications that I want to be invested in. I have never sold a single share of Tesla, and I do not plan on doing that. Elon would really have to mess up and change the business for the worst for that to happen. Maybe cancel, a full self-driving or autonomy in Tesla. That's far-fetched. Okay, I am holding a lot of cash right now, and I am getting ready to buy the dip if and when we do get a dip in our markets. And I think that is never a bad idea when stocks are this overvalued and this stretched on a headline basis. So let me know what you think about this information down below in the comment section. For anyone that does want to know definitively, I do think by the end of this year, as long as we avoid a recession, I think we get a cut in July, in September, if not September, November, and also December. 3 cuts for this year. If that comes without a recession, I think Tesla stock is in the mid to low 300s. That's my personal opinion. Now, if we get more cuts than that, if inflation really does start to fall, then you have to obviously consider the economy is probably going to be in a weak place as well by that point. But if the economy did hold up when we get 4 cuts, let's say, I think Tesla stock could easily be in at least the low 300s. But I'm very optimistic for 2025. As we'll definitely have some rate cuts by then, and your year-over-year comparables become a lot easier for Tesla. And then 2025 is potentially where you're looking at new all-time highs for Tesla, as long as we do not enter a recession. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day. If you guys want to come trade with us live in real time as well, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.